Taking a look at today's interest rate markets, I want to focus on the 10-year note ahead of this Fed announcement tomorrow. The 10-year note finding a little bit of stability here. We did see some significant selling pressure earlier in the week, but now we're breaking that two-day downtrend today, at least for the temporarily. We're seeing a bid coming back into the market, and we're seeing the 10-year bounce slightly today, right around the 129.09 level. So again, a little bit higher for the day and stemming some of the selling pressure. And I want to point out, I think as we move into that Fed announcement tomorrow, the data points this morning, I think, dictated some of the price action today. We did have pending home sales this morning. Now that was a little bit better than expected, but really the bigger number was the consumer confidence number. That was weaker than expected, and that's when we saw the bond market rally. Rates come under a little bit of pressure. Again, not too pronounced to this point, but at least stemming that fairly heavy selling pressure the market realized the last couple of days. And I want to point out tomorrow we have some big numbers. Initially, GDP coming out in the morning, and then of course the Fed announcement in the afternoon. So all eyes will be on that. And right now the CME Fed Watch tool pricing in about a 94% chance of another 25 basis point cut. But after that, it really pretty much takes out any chance of another cut from a probability standpoint into the next several meetings. So the market anticipates that this would be the last cut for several cycles here, at least the way it's pricing the action going into this announcement. I also want to point out that Royal Bank of Canada today came out with their interest rate policy, and they basically remained unchanged. The market had anticipated that. We did not see too much of a reaction to that. But again, we are seeing some of these central banks now slowing, I should say, their accommodative stance to some degree, and it's going to be interesting to see how the Fed handles this tomorrow. Looking at the trends, I want to point out going into this announcement that we are seeing an interesting trend really develop here over the last several months. If you take the August highs, now we are seeing a little bit of a lower high when you look at the recent highs we saw in September. So we saw basically a trend pattern here where you're looking at a double top, but a little bit lower top on that second pop up. And I think right now when you look at the price action, 129 is key. If we break below 129, that brings that 128.16 level back into play, and that was the low level in the September price spike there when we saw rates push up to the 1.90 on that 10-year. So again, we are getting down to a critical point here. If we see some weakness out of this Fed announcement tomorrow, we could see rates go to multi-month highs if we break through that 128.16 level tomorrow after the Fed announcement.